Hey guys, Jeff Gibby here. Hope you're doing well. Can you hear me okay? Let's go ahead and do a little bit of an audio test. Hope you're doing well today. Thanks, Rick. Okay, guess you're hearing me. Thank you. Let's go ahead and kind of get started today. My name is Jeff Gibby. I'll be doing the demonstration, and I hope you're doing well. Um, Thanks, Robert. Good to hear. Good to have you here today. All right, let's go ahead and start with the legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the company's software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. So, out of those of you that are here, I hope, number one, thanks for coming. Hope you're enjoying a nice Thursday afternoon. How many of you have MetaStock already? And if you say yes, tell me what version you've got. And while you're doing that, I'll just kind of talk a little bit about who I am in case you're not familiar with me. I've worked here at MetaStock for 30 years, 21 years, maybe 22. Stephen, thank you for using MetaStock. Scott says he has no clue what version he's got. Thanks for using. Don, thank you for using MetaStock. Theodore. Richard says yes, MetaStock 16 end of day. Richard Bell, a different Richard, says yes, 30 years, and it's awesome. Thanks for using MetaStock, Richard. And thanks for everybody that's used this MetaStock. That's good to see. Anyway, I started working at MetaStock 21 years ago. It was in sales. I did that for the better part of a decade. I think it was like 9 years and like 6 months or something. 9 years and 9 months is actually, I think, more appropriate. That was great. I worked in business development. Right now, my role is the director of sales and marketing. So that's kind of what I've done over the years. Love working for MetaStock. It's a tightly, Peter, thanks for using version 16, right? Thanks for using version 16. Lost track of what I was talking about. So you guys are fairly familiar with MetaStock. One of the things I like to brag about is the fact that it's been rated #1 in its price category for 25 years straight. So we're fairly happy with that. For those of you that don't use MetaStock, it does a lot of scanning. It can help you go through all the optional stocks and find the best scans that are available. It can help you test trading ideas. We're only going to talk about forecasting, which is one of these bullets on here. It does a really good job of real-time commentary, real-time alerts, real-time signals, and it starts at like $59 a month. So today what I really want to talk about is our patent pending forecaster. It's a tool that we've started including. I think it was MetaStock version 14 that we started including it. It might have been 13. But I want to give you an idea of really what it does and how you can use it as a tool that's very, very helpful in identifying, or I use it really mostly as a confirmation tool. I love to kind of go in there. Today's an interesting day on the Dow. Yesterday was more interesting, but we're going to go in and do some forecasting on the Dow. And if we have some time, I'm going to actually use the forecaster on some symbols that maybe you guys provide, and we'll just talk a little bit about kind of how I use it as a confirmation pattern or a way to confirm different trades. So let's go ahead and jump straight into it. I don't like to spend a lot of time in PowerPoint, and for the forecaster, I really don't need to. It's fairly self-explanatory in terms of what it does. So if you've been to a webinar that I've done before, you're welcome to answer or ask questions. I am in a hotel room today. So what I've done is I've hooked up this big 50-inch TV and put the questions on the TV. So I'll be able to really well see any questions that you've got. And we're just going to kind of go through it. And I personally wanted to start with the Dow Industrial Average because, well, I haven't done it yet. Haven't looked at the forecaster, what it's kind of maybe predicting or telling us on the DIA. So we'll start there. And like I said, if we have some extra time, we'll look at some of the symbols you might be interested in or that kind of stuff. let's go ahead and kind of jump straight into it. So I'm gonna go ahead and go, if you don't have MetaStock, this is our Power Console. Here's where we would open up a chart. Here's where we would do a scan. Here's where we would do a system test. Today we're gonna focus on the forecaster, and I'll give you a good idea of kind of what you use it for. The symbol that I'm gonna load into here is DIA. We'll go ahead and just click on that. I'll start the forecaster. It's gonna open up the charting engine for me. I'm going to go in here and kind of tweak some of the settings just to kind of see what we get out of it. It looks like I've got all of my recognizers turned on. And I want to talk a little bit as we get started in terms of what we're looking at in the forecaster. And the way I like to explain this is I like to compare it to system testing. So with system testing, what you generally do is when you get an event, whether that's like a MACD buy signal or a MACD sell signal, you say, okay, well, what would happen if I bought when this happened? And then if I sold when this happened, what would that mean? Okay. And so what you do is you kind of go through a big list of securities, and MetaStock does this really well, but you go through a big list of securities and you're able to identify which events or how much money you would have made if you bought when something happens and if you sold when something else happens. The forecaster is a little bit different. What it actually looks at, it uses the same idea of like an event, but what it looks to do is it looks to kind of identify if an event is statistically significant, okay? And it does that with the use of a lot of statistics. And we'll kind of get into kind of some of the math. So a lot of the math that we use is a patent pending, but it is using a lot of statistics. And there's a whole white paper on this that I can email you if you want it. But that kind of goes through exactly kind of how you use it and how you read it. My goal is to kind of actually show you a little bit today. So events, let's talk about those first. Right here, what I'm looking at is a list of all of the events that I've got in my forecaster. And a lot of these events are pre-built. So right here, you've got 5 bars up or more down in a row, 5 bars or more up in a row, 52-week highs, 52-week lows. Here you've got a little bit of a pattern. I took this off of a chart. I'm going to show you how that works. Here we have a Dow pattern. Here we've got a something pattern. You'll notice these ones look like they've been either hand-drawn or taken from a chart, and they have a little bit of just an explanation of how that looks. Here I've done just a classic V pattern, which I think we might see here in the Dow maybe over the next day or two, but I'm not sure. So obviously the Dow has to start going up a little bit, right? For us to get that V right now, it's just kind of maybe at this part of the V. And if it bounces a little bit, we can kind of go in and take a look at what that looks like. The other type of events, the built-in events, are events that just come packaged in the software, like Bollinger Band breakout, Bollinger break out to the upside and to the downside, or different candlestick patterns. There's a CCI one. There's a you'll see as I go through the list, it's looking for negative divergence or positive divergence in the CCI, or the CCI being overbought or oversold, or it's looking for an oscillator with negative divergence to price. And so there's quite a few of these that are actually built into the program, and we're just scrolling through the list to kind of give you an idea of what they are. I'm going to go back to the chart and kind of show you what this means, or kind of what this does. And what I'm going to do is I'm going to go ahead and click on the forecast analysis tab here, okay? And again, we're looking at Dow. And recently we had a 52-week high. Right here, what we get is we get a list of the different recognizers that's found on the chart. And I'm good, just so you can kind of see this a little bit better, I'm going to scroll it up a little bit. And what I'm going to do is I can rank these different recognized events based on how recent they happened, or how much profit potential they have, or which ones are most accurate right now, or which ones are most recent. So I'm going to go ahead and rank them based on which ones are most recent. And to do that, I just click on most recent event right here. It's not changing for me. Okay. For some reason, it's just not moving it when I click on there. I blame the TV screen in any case. So here I've got it sorted based on the ones that are most recent. And what we've got here is the most recent thing that happened is it found a Chaikin AD over oscillator in an overbought condition. It also found a trend surge down. It also found a moving average 50 cross down. Okay, and I'm going to go ahead and kind of move this down. So these are the most recent events that have happened in the forecaster engine. Okay, and you see this Chaikin AD oscillator. It just happened yesterday with yesterday's price activity. You'll see these yellow markers that appear on the chart. They're basically telling you when those events have occurred historically. So right here we had that same Chaikin oscillator went overbought again. It happened over here and here, and so you can see exactly when on the chart that's happened. This will process one event at a time. So every time you see like an arrow on the chart, it doesn't matter if it goes up or points up or down. It's just marking it on the chart for you. But every time you see that on the chart, it just basically gives you a Chaikin is overbought. If I move to a different forecaster, it's going to show you when we had a trend surge down. Okay. And again, if I move it to this moving average 50 cross down, it's going to show you every time you had a cross down below that moving average. Okay. Now, what the program's trying to do, or what the program is going to do, is it's going to take these events that are marked on the chart and it's going to perform statistics on them. Okay. And to give you an idea of what those statistics look like, what I'm going to do is I'm going to draw your attention right here to this window that says statistical report. So I'm going to go ahead and move this up again. And what I'm going to be able to kind of show you is when the event has actually occurred, or what the statistics look like on it. So here it's saying the event occurs 28 times between 2013 and 2018. So it's got 28 recognizers for when the price closed down below its moving average. On average, this event occurs every 44 days. The frequency appears to be increasing slightly. Here's where it kind of gets into the math of what it's looking for. Okay. Statistically, 7 bars after the event occurs, 95% of the time, the closing price appears to be about 7.74% higher, with a standard deviation of 0.0183. Statistically, 14 bars after the event occurs, 95% of the time, the closing price appears to be about 1.24% higher. 30 bars after the event occurs, the closing price appears to be 1.1, and here's your standard deviation, and it goes down to 60 and 90 and 180. Now, the important thing that I want to point out is that it uses these calculations in its in the forecasts that we're going to show you. But the other thing I want to point out is that that's not all that it's using. It's using some smoothing techniques and some other stuff that they came up with to kind of help get a clear picture of where this is likely to go. Okay. The product of this is what we would call like a forecast cloud. So if I come down here a little bit, or if I move this back down a little bit, and we kind of look at the forecast cloud right here, what we're going to see is basically a heat map. Okay. And I'm going to kind of explain to you a little bit about what this heat map means and what it tells you and what it doesn't tell you. Okay. If you look right here, this is when the event occurs. And down here on the bottom, you'll see 1 day after the event occurs, 7 days after the event occurs, 14 days after the event occurs, 30, 60, and 90. You'll notice right here, we've got a forecast length. Right now, that's set to 90 bars. We can actually move the length of that out or short if we want. You can go like 30, 90, and 180 bars. Because of kind of the amount of time that it takes for a 50-day moving average to cross down, by default, the forecast length is 90 bars, okay? If you want to, you can move that up to 180 bars and have the program go down 180 bars to kind of determine a bit of a longer period view. That's up to you, okay? Oh, actually, I moved it to 30 bars. So that would be 30 bars. If we move it, I'm having a little bit of an issue with kind of the way this is working on my touchscreen. But if I move it down to 180 bars, what it's going to do is it's going to calendar or do a forecast cloud for 180 days. I'm going to move that back up to 90 days. And we'll just kind of do it based on kind of what the default view is, okay? So what is this telling us exactly? This is the product of all the statistics. And right here on the bottom, like I said before, we have kind of these intervals of time that you can look at that it's going to tell us 1 bar, 7 bars, 14 bars, 30 bars, 60 bars, and 90 bars, okay? And you'll see kind of what we call this the forecast cloud, but what it's actually kind of telling you is it's kind of trying to give you a probability heat map. So when this, in the past, what's happened most of the time, what's probable going to happen is that in this case the Dow took a shape like this after the 50-day cross down occurred. And the way we read this cloud is you see the areas of intensity over here by the thermometer. If you look right here, the yellow area is about a 95% or higher probability. So what that tells us is the day after the event, it's very, very likely to stay right at the price point. 95% of the time, it'll stay very, very close to where it closed the day before, okay? If we look a little bit here in kind of the outer lying areas, you'll see it gets a little bit red here, okay? So right here where we've got this red, you've got an 80 to a 90% probability that it's going to land up right here. And as you get kind of a little bit of the darker shadow, it goes down to 60. Where it's blue, you're not looking at a very probable event because it's about 40%. And where it's black, it usually that is very, very unlikely to kind of go into those areas because it's a below 40% probability. Okay, does that make sense so far? Does anybody have any questions yet? If you do, feel free to ask, but this is kind of what it's looking to tell us. So if we look at a period of about 30 days, for example, after a moving average cross down occurs, what we can kind of tell is right here it's purple, right? Purple means 60 to 70% of the time. It's likely to be up about 2.5% after it crosses that probability, okay? There's other probable outcomes, but as you get in here to 0% to 5%, that probability actually drops to about 40%, and it almost never happens to go out of those ranges after that, okay? Make sense? Okay. So if we were to kind of go back and look at this on the chart, I can actually go in, and we just had one yesterday. There was a dramatic move down in price yesterday. So I can click on that, and it'll actually kind of give me that probability map on the chart, okay? So if I'm looking at this, today what I'm expecting is that there's a high probability that it's going to close where it's at, or it's going to kind of close towards where the bar closed yesterday. And as we go in, back in time in the future, you can kind of see where we kind of expect it to go, okay? Dave says, do the questions have to be about the forecaster only? I assume he wants to ask me if I'm feeling good today. No, you can ask any question you want. We'll keep them kind of topical for the little. I'd ask you to, if you have questions about the that kind of take us out of the lesson, you can ask them. If I can answer them real quickly, I will. And if not, I'll actually give you some resources where you can get answers, Dave, right away. So Matt says, what factors are you using without giving away the secret sauce for future forecasts, aside from price changes? And I would actually, Matt, I'm going to give you an answer, and then I'm going to have you email me for the white paper. So the reason is like with statistics, I'm not a statistician. So drop me an email, and I can send you the white paper, and he goes into quite a bit of what he's looking at. When he talks about it, when the programmer who kind of designed this out talks about it, he kind of talks about when you're dealing with probabilities, you're usually dealing with certain outcomes. Okay, let me get a little bit specific about what I mean. Let's say that we're flipping a quarter and we want to figure out the probability of that landing on heads. Okay, you could flip the quarter quite a few times, but the output that you're always going to get is heads or tails. There's always a known impact in terms of the forecaster. Or in terms of statistics, when you're generally dealing with them. When you're dealing with prices, this could land at 250, it could land at 251, it could land at 252. So there's some smoothing that they use to kind of look at that. He also uses some pattern recognition, and he's described it a little bit to me in terms of what he's doing, but he's looking at kind of what's happened in the past as a map. So if you look at the statistical report, it's only reporting like what happens after 7 days and after 14 days. But in all actuality and all reality, it's looking at every single day and performing this math. He also had some other methods that he talks about in that white paper in terms of what he's using. I don't remember them for the purpose of answering your question. That's why I want you to email me for the white paper. That'll give you a good answer as well. Okay. Dave, I don't think I can answer the question that you have. I need the currency performance value in my Zenith platform. And what I would probably recommend for that one, I don't know how to answer that right now, but I can tell you that there's a lot of information that's available, as you know, in Zenith. And so what I would tell you to do is actually chat online with our support staff, and they should be able to help you with it. So metastock.com/customer. Thanks for using MetaStock. They'll be able to kind of help you get the right answer for that. You're welcome. You're welcome. I told you you'd get an answer, right? Okay. Now there's a couple things that I would point out, okay? You can actually kind of draw this out on any given time, okay? So if I wanted to kind of see what this looks like on event number 27, right now we're on the most current event, I can actually plot it out here. And I can actually draw that currency out. And what you'll see is it had a pretty good probability that it missed right here, but it kind of stayed in that high probability zone and actually rebounded into it. So you can kind of see how well it worked. What will happen though, is if you kind of look at events that are kind of far back in the past, like maybe if I put it on this event happened right here, this event number 24, you'll notice that the cloud shape is quite a bit different. This did a really good job of calling this pattern. But the reason it looks different is it's actually ignoring any event that happened after this event happened, to give you an idea of what the forecast cloud would have looked like here in the, if you were looking at it back in May of 2017, this is the kind of cloud you would have gotten. And this looks really, really good. But the reason that the cloud looks different is what we wanted to do is give you a good idea of what you would have been seeing if you had plotted the cloud on that particular day. So it ignores anything that's happened afterwards, and that's why your cloud looks different, okay? What we didn't want to do is perfectly curve fit this. If you're playing with this as a tool to kind of see how things looked in the past, we wanted to be able to show you what it looked like in the past. Marinus says, after 2 dramatic drops, the plume is still pointing up. What does it take for the plume to indicate a downturn? It takes a change in market behavior, because it's just looking, in this particular case, what it's looking at is statistically what's happened. And obviously market changes behavior, but it would take a change in market behavior for that to actually start to indicate a downtrend. Generally, the equity market has a tendency to go up, you know. You could take a look at what it looked like after it happened here on event 25. This was the biggest downturn that we've had in the last while. And you'll see it's pretty good at actually kind of forecasting that out. You could go back to the big crash, the Great Recession, as they called it, and kind of see what forecast clouds look out. But what it would take is actually the statistics to start to change values. So, because what it is looking at is historically what has happened. And it would take a change in behavior for it to change dramatically. And then, of course, you'd expect a change in the behavior at that point. So to recap, okay, so I did actually kind of like the way that this 50-day cross down actually happens. And we did just have that event occur. So this would kind of give you an idea of what the forecast is expecting. It's a little bit what I'm expecting too. The market may continue to drop right now, but most of the time it won't. Most of the time we have these Sunday jerky corrections. It crosses down below its 50-day moving average, the market normalizes and then starts to kind of trend up. I would say that based on kind of what the statistics look like right now, we're not going to be hitting new highs for about 45 days, statistically speaking. Although this might be a really good time to consider long positions. I'm not quite there myself. I want to kind of see it kind of going up above yesterday's lows and kind of back into this area. But this is kind of the correction I'd expect from here, particularly. So there's a couple of other different ways you can use it. Obviously, we're just looking at that 50-day moving average crossover. When I'm actually looking at this, I like to look at the recent events. And this one's pretty good because you have a lot of red and a lot of yellow. The more yellow you have on a chart and the more red you have on a chart, the more that it's statistically probable. So if I look here at this Chaikin ID overbought, oversold, I can see that it generally predicts a little bit of a flat, but it isn't. You'll notice it has no yellow at all, and it has a little bit of red, and that red doesn't last for very long. So I'd say basically looking at that one, it's less significant. It's not as statistically significantly, and you can actually kind of eyeball that as well. Okay, this 50-day moving average cross down is the one we were looking at. What about the trend surge down? Same thing. The moving average is my favorite one. Let's look at the Chaikin AD overbought, oversold oscillator. Right here, we've got a bit of yellow. And you can kind of get an idea. You'll notice that this is -5 and +5%, but it has a tendency to kind of go up. I'm expecting it to kind of go up. Lily says the yellow cloud doesn't mean the chance is higher, or next day close at the yellow color. If the cloud is shaping up, doesn't mean that the Dow is going to go up. It doesn't mean that the Dow is going to go up. The Dow will do what the Dow want to do. What it means, though, is that it's statistically likely. In the past, when that's happened, it's gone up afterwards. Okay. Dale asks a question, can the forecaster only handle 5 days worth of data at a time? No, you can load as much data as you want into Dell. These are all great questions. Keep them coming. I love how involved you are in this. My goal here is actually just to kind of give you some insight to how it works. Okay. I'm going to show you now how I use the forecaster. Okay. In particular use cases. Right now, I don't have a buy signal on the Dow Industrial Average, but we have had a very significant, well, a 3% down within the Dow yesterday, and right now it's sitting at a doji, and it looks kind of interesting. For me, what I'm looking for is based on what Steve Bigelow talks about. We'll just talk a little bit about what I'm looking for on the Dow. Let me go over to the Dow chart and see if it still looks the same. So I'm just going to open up a chart of the Dow. We've had this huge day of decision, right, that came in yesterday. The bears decided they were going to take control of this market. They pushed it down, had a huge bearish day, very big black candle, okay? What's looking to shape up today, and we still have some market to go, not much, but we're having this day of indecision, right? So this is a doji bar. A doji is an indecisive bar. It shows the bulls want to push this up, but the bears are still pushing it up. It shows uncertainty. This is the way Steve Bigelow describes it. What I'm looking for tomorrow is a decision. I don't want to trade on indecision days. So like if we had a bit of a gap up tomorrow, that would be a doji best friend according to Steve Bigelow. Or if we had a nice big bullish day, that would be my confirmation that the bleeding has stopped and it was just a temporary glitch in the marketplace. But what happens tomorrow, if it gaps open high tomorrow, that's going to be a great signal. That's what Steve Bigelow calls a doji best friend. Okay, if it gaps down tomorrow, same thing. Cover your longs, right? Like that gap is basically the market deciding that it's going to run this thing, and that the decision that we had today is indecisive. So tomorrow, what we're looking for is kind of a decision to be made here. Today, we've had a lot of indecision. We don't want to trade on indecisive days. We want to trade on decisive days. So personally, that's what I'm looking for. Okay. If I did see that gap up tomorrow, typically the way I use a forecaster is I can say, okay, well, here's the pattern that we've got. Let me go back into the forecaster. And what I'm going to say is like, okay, here's the chart that I've got. And one of the things I like about the forecaster is I can define a pattern based on what the chart is actually doing. So, and I've done this quite a few times, and sometimes it's very, very impressive. But right now we have that really big move down today, followed by a slightly indecisive day like I was talking about. And then we have a little bit of a chart beforehand. What if I wanted to take that pattern right off of the chart and just kind of put it out there to see how that has statistically performed? And what I'm going to do is I'm going to say, okay, well, we had this bit of a run down followed by a nice gap down and like move down. I'm going to go ahead and define this as a pattern from the chart. So I'm going to go ahead and kind of just take click on this user defined pattern selection right here. I'm going to go ahead and draw the pattern that I want to define. I'm going to make it this big. So we have a little bit of that move up followed by kind of that work down. That's the pattern I'm going to define. So when I define that from a chart, basically it draws the pattern for me. Okay, so we have that nice little run up. We have a couple of days out, and then just that complete collapse that happened. Okay, what I'm going to do is I'm going to call this Dow. Actually, I'm going to call it a Dow pattern. And you can see I do this a lot. I have a lot of a Dow patterns. And I'm going to say October 11th. Oh, October 11th. You can't put that slash in it because it doesn't like it. It has to be numbers and letters. So I'll go ahead and click on save right here. Okay. And now what I want to say is, okay, well, when has this actually happened on the chart in the past? When have we had kind of this little bit of a rounded top and then just kind of a dramatic drawdown? So I'm going to disable all of the other patterns except for that one. I want to kind of just see that one for a second. And I'm going to rescan or have it rerun the analytics based on that pattern. Okay, and there it happens. Now you can kind of see what happened on the chart based on that forecasted cloud that I just drew. Of course, it just recently happened because I took it right off of the chart. So we can see here what happened there. Okay, if I highlight it over here, I'll point your attention to the blue line. The blue line is actually the line that I took off of the chart, and the red line is actually what happened. So there's a match there of about 91%. And you can see after that happened before, it kind of fell down a little bit and then moved up. Okay. If we look at this pattern right here, what happened right here, you see the blue line, you see the red line, the pattern confidence that we've got in this pattern is 85%. Okay. And then what happened was it had a pretty good move up right after that. Okay. Here we had an 82% and it moved up. Here we had a 75% and it kind of moved sideways and then kind of started to move up. And so even without kind of doing the statistics, you can kind of get an idea of how well this pattern kind of behaves. And what I'm seeing most of the time, if I just kind of eyeball this, is it goes sideways or it goes up. So far, there's been one instance of it actually going down immediately, but usually there's a bit of a bounce after this pattern occurs. Okay. Of course, it does the statistics. I'm not going to bug you. I'm not going to bore you again with kind of going through the statistics. Let's just look at the kind of the way that the forecast cloud looks, okay? And so what I'm seeing here is kind of a bit of a story in terms of what happens on the chart, okay? So if I'm looking right here, I can see that a lot of the times we kind of have a bit of a 60% probability that it's going to kind of go up. It doesn't go up dramatically right here. This is the 2.5% level right here. And this is the 5% level, and this is a 0. So about 60 to 70% of the time, maybe, it has a bit of an upward bias, but it doesn't move a whole lot after that particular event happens. Okay, and I can also plot that on the chart and kind of see exactly what we're looking for. And in this, or what we're looking at, and then now this is drawn on the chart, and I can kind of see what my expectancy looks like after today. Don has a question. Let me read it. Richard, let's see. Lots of questions. Let me scroll up a little bit. We'll just, right now, this is kind of going to be a pretty informal thing. I like to do them a little bit informal because I can answer questions and stuff like that. We answered Lily's question. Richard said, right now, what you're looking at is a long black candle bouncing off the 200 exponential moving average. Good point. Good point. I'm still looking for a confirmation tomorrow. I think there's a good chance it'll bounce. You know, a lot of times you kind of have this knee-jerk reaction where the market just moves like insanely. But I'm waiting to see what happens tomorrow, because what's going to happen is it looks like the market's going to close on this doji. And tomorrow we may have a decision. I'm going to be looking for that gap up or that gap down or that big bullish candle or that big bearish candle to see what I want to do. So Don says, can you run WPM.to? Don's up in Canada, I bet, on the forecaster if you have time. We'll have time. Yeah, I'm kind of wrapping up what I wanted to show you with it. So we'll have some time to look at exactly how this looks. And I'll kind of give you kind of my initial take on it, although it's not a recommendation, obviously. And I'm not even sure what WPM.to is. I've never looked at it before. So we'll just I'll give you some advice in terms of the way I'd be looking at it anyway. Lily asked another question, what does this yellow triangle above the chart or below the chart represent? That's a really good question, Lily, because I get that question all the time. And let me go back, and I want to be really, really specific, because sometimes the arrows point up and sometimes the arrows point down, okay? You'll notice right here it's up, here it's pointing down, here it's pointing up, here it's pointing down. It means nothing if it's above or below. What the forecaster tries to do is say, okay, well, it'll look better if I put it above the chart. There's a little bit more space here. So I'm going to go ahead and put it above the chart, okay? Right here it says, okay, well, there isn't much room right here above the chart, so I'm going to put it right here below the chart, okay? And that's all it's doing. It doesn't matter if it's above or below. It's just marking where that event occurred. It doesn't mean, just because it's below the chart does not mean you should buy it. Okay, it's just marking the event. We call it an event marker. Okay, hopefully that's clear enough. So there you go. Again, I'm a little bit cautiously optimistic on Dow right now. We do have these jerky movements that are kind of knee-jerk reactions. I think we're going to have a bit of a kind of an upward pressure on this. I'm waiting personally till tomorrow to see where we open. Where we open is going to tell us a lot. Okay, let's look at, there's one other thing I want to show you, and then we'll look at WPM.to for you. So I did show you could take, and you could draw patterns on a chart, okay? The one thing I didn't show you is you have the ability to freeform draw just about anything that you like. So for example, if you're looking for a double top or a double bottom or an ascending or a descending triangle, or a break of support, anything that you kind of want to draw, if you want to hand draw a pattern, you have the ability to do that in the program. Just like we took a pattern straight from the chart and it looks like a hand-drawn line right here, we also have the ability to kind of draw a pattern that we want. So I'm going to show you how that works. I'm just going to click on this Recognizer Library tab. I'm going to click on Draw a New Pattern. And I'm going to just do a simple V pattern, okay? So I'm going to call this, there's one already in here because I show this quite a bit. I really like this pattern editor. I'm going to go ahead and write a V pattern. I start it with A because then it shows up somewhat close to the top of the list, and then I don't have to kind of go dig through it. That's the only reason I'm starting it with a V pattern, okay? And now I can make a little bit of a description. I'm going to make this a bit of a classic V pattern, okay? And right down here, I can actually hand draw that pattern. So typically when I'm looking for a V, I'm looking for kind of a bit of a sharp decline that accelerates, just like we've had on the Dow, and maybe an upward movement or an upward tick, okay? So something like this. Now, you can move this as far as you want. You can draw the pattern however you want. And once you've gotten it drawn, you can actually you can go in and kind of change the individual waypoints so it looks like just by dragging them around. I say that's a pretty good V pattern. Obviously, I could finish that with a W pattern. I want to be able to forecast the V pattern from like the first day that it actually rebounds, okay? So that's the way I'm going to do it. Right over here, I can get really specific as to where I want that pattern to occur. I'm going to say I just want this shape, okay? And what I'm going to say is I want this to occur within about 15 bars or so. And I want this to be either I want it to be really, really strict when it's looking at the patterns, or I want it to have a medium sensitivity, or I want it to have a low sensitivity. And you can set that to wherever you want. Obviously, with a low sensitivity, it'll get more patterns, which will give you more statistics, but the statistics might be less valid, right? With a high, you might get less patterns, which will mean less statistics, but that statistics might be more valid because you are only looking for very, very pure patterns. In this case, what I'm going to do is I'm going to say I want a medium sensitivity. And I'm going to say this is a bar that I want you to do a default cloud focus of 90 days on. So perfect. There's also options. If I want an inverted V pattern, I can draw that. I could just invert the pattern. I could reverse the pattern where it'll kind of basically put it at the opposite direction. I'm not going to do that. I'm going to leave it like that. And what I'm going to do is I'm actually going to save this as a pattern now. Okay. Once that's done, oh, I already have this one. Free 2 pattern. Okay. Like you can't name it the same thing as it's already named in there. So we'll go ahead and you'll see I had a V pattern. So this is a V2 pattern. You can see they're very, very similar. You can see I like to have show how easy this is. And now what I'm going to do is I'm just going to scan on that pattern. So I'll just go ahead and run that selected scan against that selected pattern. It's going to go ahead and see if it can find any time that's happened on the Dow. Ah, look, it's happening right here. Oh, wait. No, that's the Dow pattern that we just drew. We'll go ahead and click it over to the V2 pattern. This will show up today if we have that sharp upward movement that I was looking for. But it has happened here. It has happened here. It has happened here. It has happened here. So you can kind of see how your pattern is historically matched up. And of course, you get the statistics. You can go into the forecast cloud, and you can kind of get a bit of an expectancy cloud based on time. Okay. And then if you like the way that looks, of course, you can kind of go in, see how that would have matched up in the future to what actually happened. And you'll see based on this last V pattern, it actually kind of moved up pretty well. Here we've got a bit of a right into that cloud, which is where it stopped yesterday. Here's where we're hanging out today. So we'll see what happens tomorrow. I very, very much see this could happen as a V cloud pattern. So that's what it means. So open up a new chart pattern. I'm going to go ahead and click on the Open New Analysis button right here. And we'll go ahead and quickly look at WPM.to for you, Don. Okay. And we'll just do it on a daily. You can change the interval on this. You can do intraday, you can do weekly, you can do whatever you want. I will need to actually turn on all the recognizers again. So let's do that, because right now it's just going to do that, those 2 patterns I had turned on. Let me enable them all real quick, and then I'll just rescan this chart based on all of the selected analysis. And we'll see what's happening recently, and we'll kind of try and make some decisions. Dawn, do you mind if I ask you if you're bullish or bearish on this particular stock? And you can answer that if you want to. While you're answering that, let's go ahead and just kind of take a look at what we're seeing. We did just recently set a 52-week high. Right now, it's gone back to the default that I've got. But what I want to see is actually, instead of actually ranking it by the highest profit potential, what I want to see is, let's look at the ones that have the most recency. So I'm going to go ahead and change it down to look at the most recent events here. And we'll just kind of get a consensus. We'll take a look at a few of these forecast clouds. I don't think we should look at all at this Dow pattern. We have the same pattern in this as we had in the Dow right now, with a 95% confidence rating. Actually, maybe we should take a look at that. It looks the same. It had an ETS 2.0 buy signal yesterday. Perfect. Well, let's take a look at kind of, let's take a look at kind of the way I would kind of use this as a confirmation tool. So right now, we just recently had that Dow pattern. It's happened a lot on this particular chart. Let's see if it has any significance. It has a bit of a bullish upward bias. What I'm seeing here is within about 30 days from today, could expect maybe up to a 50% rise, or a 5% rise. But this is kind of what our positive expectancy looks like. That looks pretty good to me. I'd use that as a way to confirm that maybe as an entry. Okay, let's go down to the Chaikin AD oscillator. That's showing us kind of a bit of a flat chart. You did have the moving average 200 cross down yesterday. Let's see what that looks like. You kind of have a little bit. So here's the bottom line. What I'm seeing here is not a lot of certain things. I like to see a couple of the most recent events have a bit of some positive statistics going upwards. But here's kind of the way I'd look to play this if you wanted to take a long signal, right? I go, based on this one, I'd say, okay, yeah, here's kind of what we could have a positive expectancy for. This is about where I'd actually look to put in a stop. Because you know, basically, if you get down below this area, you're getting out of the statistical norm. And so you can use this as kind of a way to kind of look for your targets and stops as well. So if you did decide you wanted to buy this, I think it's going to look the same as it did with the Dow, where we have kind of a bit of a doji day. I'd wait a day. But if you go ahead and go long, I'd go ahead and put a stop loss down below this high probability area. That's the way I'd look at it. I am on the Dow. Oh, that is hilarious. Don, I'm glad you were paying attention. I'm like, this looks just like the Dow yesterday. Okay, so let's take a look here at WPM.TL, which had a buy signal yesterday. So let's go ahead and look at a couple of the forecasts. I'm like, wow, this looks really good. This doesn't look like it would confirm anything for me, but this is a signal I wrote at an event I did. We did recently have a 52-week low. Oh, this is again profit potential. Let me change this over to most recent events. I'm going to set that as my default as well, so that I had to keep changing it if we look at anything else. So let me do this on most recent events. I'm going to go ahead and set that as the default way of looking at things. Save. So we did just have an LCI bullish breakout, but this doesn't look good to me. We did have a moving average 1040 cross. This is a little bit more positive. This is the moving average 50 cross. This is a little bit more positive. I'm not seeing anything in here that would help me confirm to take that buy signal, Don. This has a bearish expectancy. So very quickly, I don't like it as a long candidate, at least based on the forecasts that we're looking at. So in fact, all of the forecasts kind of show a bit of a bearish bias here. I don't like it. It wouldn't confirm it for me, is what I'm saying. So, and this chart does not look like anything like the Dow. I was like, I've been in the webinar room now for about 2 hours, and I was like, wow, this looks just like the chart we were just looking at. So in any case, but that's exactly how I use it as a confirmation. So it's a silver company. Okay. Matt says, would you mind showing the RSI recognizers? Sure. Let's go into the recognizer library, and I'll show you the recognizers that it'll look for with RSI. So what we've got here is, if I just go down to RSIs, here they are. Okay. So the 4 different things that it'll look for is it'll look for a negative or a positive divergence between price and the RSI. It'll also look for RSI to go overbought and RSI to go oversold. So there's 4 total recognizers in there for you, Matt. Okay, so that's what I wanted to show you today. Hope it was helpful. Thank you for all of you that used MetaStock. Timothy asked a question, can we create a new event that is a combination of multiple pre-established recognizers? The answer to that is not yet, but it's coming. So it's in the future. If you know MetaStock well, Timothy, you'll know that we have the ability in all of our power tools to create anything you want using kind of a fairly easy formula language. They haven't tied that into the forecaster yet, but they're actually working on it. So that'll come. The other thing that I want them to take out of the forecaster and put in the scanner is that hand-drawn engine. And they're working on that too. So it's a really good question. Right now, you can either draw an event or you can use the ones that are pre-established, but you can't combine them. That's coming, okay? So if you guys don't have MetaStock, again, that was just our patent pending forecaster. You can also scan for the market. You can test trading ideas. You can get real-time alerts and commentaries. And again, It's won the Reader's Choice Award every single year for the last 25 years in a row. The offer for you to try MetaStock, and I'd encourage you to try it, is if you do the real-time version, basically what we're going to do is you can pay for a month of real-time, and we'll give you 3 months. So the real-time version of MetaStock, if you're just doing Forex or you're okay with delayed, is $199 a month. If you want real-time, full real-time, it's $250 per month plus exchanges. And that also includes that new service I talked a little bit about, the one they spent $1 billion on. The offer that we're going to have for you is if you pay for a month, you can get 2 for free. Okay. We also have the daily chart version of MetaStock. It's $59 a month, but if you buy one of those, you'll get 2 for free. Okay. So if you're interested, this is a great way to try it. We're going to include with that trial all of our training libraries. So it's going to show you more about the forecaster. It's going to show you some of our favorite systems in MetaStock. It's going to show you how to run system tests and scans and forecaster and that kind of stuff. That's all going to be included for free. We want you to keep using the software. Typically, our retention on these trials is extremely high because once people start to see what's actually available in the trial, they love it. We're also going to include, with that trial, we're going to include what we call a white glove installation support. And this is one of the best things that we've added recently. What this means is when you talk to one of our sales guys, they're going to set up a time with our support team that'll go in and they'll help you go ahead and get everything configured. They'll answer questions that you've got, and they'll do a really, really good job. We call it a white glove installation service. Okay. In addition to that, what we're going to do is we're going to, like I said, give you all of the training materials. And the thing is if you try it and you find it's not useful for you, you could just cancel it. You just basically cancel your subscription. So what I have you do is if you want to take advantage of that extended trial, or if you want to get some more information on the program, go to metastock.com/saleskchat, www.metastock.com/saleskchat. They'll be able to answer any questions that you've got. They'll do it right there on the phone. They can send you some more information on our software. They can help you get set up for the platform, and they can also help you get set up for that appointment to help you get all of the program installed and go through some initial training with you. Okay. You can also give our guys a call. The phone number for that is 800-882-3040. Timothy and Ron ask a very similar question. I'm going to read Ron's because it's a little bit easier. Will there be a video to review? I assume you mean this video, which is what Timothy is asking for. This video was recorded, and I'm glad. I take it as a compliment that you want to see it again. So you should receive a copy of this archive within 1 hour of me leaving. So, which is going to be pretty soon. So yeah, there's a video. It will be emailed to you automatically. That video will come out as soon as GoToWebinar has done their little finessing on it that they do in the back end. Within an hour, you'll get an archive. So with that being said, I want to thank all of you guys for coming. I hope this was helpful for you. Thank you for all of you that use MetaStock. That's great. We really appreciate it. And for those of you that haven't tried it, give it a try. There is a reason it's been rated #1 in its price category for literally 25 years in a row. I mean, and think about that. That's like every year that we won it in 94, we won it in 95, we won it in 96, we won it in I could go on, but I'm not going to. Timothy, thanks for saying it was a great presentation. I'm glad I love that. In any case, thanks for spending an hour with me. I'll see you at the next event, and thanks for coming.